This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Chairman Powell, President Biden, and a ton of earnings in between. From New York City for our audience worldwide, good morning, good morning. What a week ahead on Bloomberg Surveillance, live on TV and radio, alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Equity futures are nudged lower by 5 points on the S&P 500. Yields going higher by a couple of basis points. Tom, the chairman this Wednesday, the president in front of Congress.
Yeah, it's going to be an interesting week, and the chairman, maybe he'll give us a surprise where we think it's a snooze fest. But, John, to me, what's so important here is what has not moved, and you see that Peter Cheer to come up with us, and we'll talk about the real yield, which really hasn't moved as much. Of course, this off the Aberdeen uproar where they've changed their name and taken the vowels out. We're doing that in spirit this morning, John. But the real yield, John, at a negative 0.76, the key story is it hasn't moved.
The two stories conflated there, Tom, so let's do both. Yields are higher. I'm with you on the real yield side of things. Peter Cheer expecting a persistent higher inflation read over the next year. Look out for that conversation in a couple of minutes. Then Standard Life Aberdeen with this press release. Standard Life Aberdeen, the company, today announces its intention to change its name to Aberdeen PLC, except it's spelled ABRDN. The new name, pronounced Aberdeen, helpful, will be of a modern, agile, digitally enabled brand that will also be used for all the company's client-facing businesses globally. Tom, we touched on this in a previous hour. Martin Gilbert, a man who's been a good friend of Bloomberg over the years, and we've had several conversations with him, of course, the former chairman of this company, this was his baby, Tom. Imagine what he thinks of ABRDN PLC.
I mean, what would Martin Gilbert say? I mean, that's all there is to it.
Let's get him on the show and find out.
You know, Primerica, and there's been other train wrecks through the years. But, John, I'll be honest, when I first saw it, I thought it was a joke. And to me, it's frankly, it's trophy taking.
Lisa, it was 3:50 when I woke up, and I thought it was April Fool's.
Well, the press release doesn't help the matter. I mean, just to give a sense of how they explained why they did this. It's part of a modern, agile, digitally enabled brand. Basically, this idea, and you talked about this, John, but that phrase in particular, that they're trying to face themselves toward the digital future. And as we head toward tech earnings throughout this week, how do these companies make themselves into tech companies? They just take away the vowels.
There's no vowels in a digital future, apparently. This feels very 2002 or something like that, doesn't it?
Go further back.
Go further back.
For those of you on radio right now, we're putting out on TV banners of all this, like, what would Martin Gilbert say without the videos? And come on, our crack, I just got a report in from our head of marketing, Young Buchanan. He's Australian. What the hell's that about? But come on, John, I just think it works.
It works. Do you like it? Okay.
KN, FRR, and brr.
Nice. Fur and burrs.
We've beaten this to death.
I can't get it done.
All
Can
right.
I do the markets?
Please.
Thank you. Equity futures down 5 on the S&P 500 this morning. It's a marginal move lower to 41.66 and down a little more than 0.1%. Talked about yields being higher. They are by 3 basis points to 158.79. We had a look at 121 on euro dollar again this morning.
Yes.
Pulled back just a little bit at 129.92. Lisa on top of the copper story through this morning. Crude lower though. Crude lower by about 1.5% to $61, Lisa, and about 24 cents.
And there was a really interesting story on the Bloomberg terminal by our columnist, of course, looking at how India's horrible crisis with respect to COVID is actually lowering global oil demand expectations. It's something to watch going ahead. Another thing I'm watching, durable goods orders are coming at 8:30 a.m., kicking off a really busy week of economic data. We didn't even mention that. We're getting PMIs on Friday. We're also going to be getting income information. Interesting to see whether people's income is going up in tandem with these increase in prices that we see across the board. Also today, we've got a slate of auctions, $60 billion of 2-year notes from the U.S. Treasury Department, $61 billion of 5-year notes. I am more interested in that. How well is that bid, given the fact that people do expect, like Peter Cheer, who is coming up, inflation to pick up later this year. And of course, after the bell, Tesla to report first quarter earnings, look to deliveries, look to their discussion on Bitcoin, which happens to also be up, rebounding a little bit after last week's sell-off. This idea of Tesla being on the digital forefront in addition to actually having more deliveries, particularly in China. But how much do they have to discount each car, John, in order to get those deliveries, in order to get those orders over in China?
Then it's Apple. And then it's Amazon. Earnings piling up through the week. You talked about the issuance to supply lease. We touched on this earlier too. 7-year debt deal from the Treasury tomorrow. $62 billion worth coming up at 1 p.m. Eastern tomorrow. Anyone who closely follows the Treasury market knows that there was a bit of a hiccup a couple of months ago around that 7-year issue. Let's turn now to Peter Cheer, Academy Securities Head of Macro Strategy. Pete, good to catch up with you, sir. You met with the team in San Diego in person. You got on a plane. You went and saw the team over at Academy. How did it feel, Pete? How do you feel, sir?
It's been great. This is my second business trip. Went 2 weeks ago to see clients in Dallas and Austin. So I think people are going to get back out on the road. Zoom is great, but it's really nice to meet people face to face. So I'm excited. I think we're going to see that normalization and have a great summer.
Domestic leisure travel has exploded, Pete. That's not going to be news later this summer. What will be news is if people get back on a plane and do what you did on the business side. Do you think we can get back to normal a lot quicker than maybe some people expect?
I do. I think there's going to be an ongoing slowdown of kind of internal travel. So, to go see your San Diego office like I did, I think that won't be the norm. But I do think people are going to get back on the road to see their clients, right? One person's going to close a deal because they went somewhere in person and met with people. And all of a sudden people are going to realize, shoot, we've got to do that. We've got to retain those relationships, rebuild those relationships. So I think there's going to be a surprise to the business travel.
Peter, we're starting to see mergers. We're seeing big mergers and maybe the strategic battle of Canadian Pacific and Canadian National. Moments ago, we see a small merger of New York Community and Flagstar Bancorp of Troy, Michigan, 5,000 employees top to bottom. Is that the surprise out of the pandemic as a national roll-up to a new efficiency?
I hadn't thought of it quite that way, but it does make sense. We're expecting high M&A activity. We've seen stocks stabilize. So there's, that concern about, I'm overpaying. I think some of that gets alleviated. And while yields have risen, they are still very, very low, and real yields are still negative. So you're heavily incentivized to lever up to acquire companies if you think there's a good strategic fit.
And what do you feel is on use of cash? I mean, I get the idea that there is going to be CapEx, but what I see so far is just a re-emphasized share buyback model. Is that what we're going to hear this week from big technology?
Yeah, I think we're going to see continued and ongoing share buybacks. A lot of companies raised even more debt than they necessarily needed last year. They extended. Then you've had really good profit growth. So I think they're sitting on a lot of cash. And use of proceeds to buy back shares continues to make sense, especially as increasing uncertainty of what the tax regime will look like going forward. You may as well take that cash, buy back your shares, and that'll give you more flexibility to deal with however tax outlook comes in a year or 2 years.
Peter, what are people misunderstanding about inflation right now?
I think they're missing a couple of things. I think we're actually starting to see wage inflation. So, lumber prices, things like that are skyrocketing. But this inability to hire low-wage workers is starting. And as we start building out a very light manufacturing base, I think it's going to be harder and harder to hire kind of low-type middle managers. That's coming. And in my view, ESG itself and the sustainability is inflationary. So designing sustainable products, designing and manufacturing in a sustainable way will be inflationary. And I think a lot of that will get pushed onto the consumer. And I think that's what we're missing. We have to stop focusing on this reopening kind of inflation and think, what's this economy look like 6 months, a year down the road? And that's where I think you're going to see this real inflation, and it's going to be more persistent than people are currently pricing in.
All right, so where in the markets is it most mispriced? In other words, which aspect of the markets could get most surprised by the inflation that you talk about?
I think we're going to see it in the yields. I think we are going to see a relatively fast move to 2% on the 10-year. And I think that's going to impact some of those huge growth stories, the companies that have really relied on very cheap financing and, a low discount rate when looking at their future cash flows. And those are often the same companies that I think are at most risk from changes in the tax code. So I think it's going to be that high flyer, smaller tech might be under a little bit of pressure. But as a whole, because we're getting this economic growth, it's not going to be a massive weight out on markets.
Well, Pete, what I want to know then is not the call on 10s, it's the call on 2s. Do you think it changes anyone's view on when the Fed makes a move?
For me, no. I think this Fed really doesn't believe in the Phillips curve anymore. I think they want 3% unemployment. And part of that is they really do have now a belief that inequality, job inequality, things like that are very, very important to focus on. And the one way to drive minority unemployment down is to drive overall unemployment down, especially when, as the Fed, your monetary policy tools are quite blunt. Yep. So I think they're going to remain on hold and push this harder than we ever thought possible.
Pete, it's good to catch up. As always, Peter Cheer, Academy Securities Head of Macro Strategy, meeting the team over in San Diego, California. And Tom, you've got to say, Business travel. I agree with Pete. If you can get a deal done, you're going to get on a plane and close. And in a nod to Glenn Ross, travel is for closers. And I think that's going to be the story in the next 12 months. Do you like that? I won't say the next line in that Alec Baldwin speech, because the next line gets a little bit messy for live TV and radio.
Radio, it's not appropriate. But, John, what I would say is it's been predicted for years that face-to-face would end, and it just doesn't. Well, it just doesn't end.
Although, did you see the story about how European banks, big European banks, John, are ending about half of their business travel? They expect that the actual business travel will not come back more than 50% of 2019 levels. I mean, there is material change.
Between internal business travel and client business travel, though. Okay. Now, going to meet your colleagues on the other side of the world, I think a lot of that might get pulled back. But meeting clients, I think is going to be as important as ever. If you can close that deal by meeting a client and getting on the plane, you will.
What was the next line after that one?
I don't think you want the next line. What is it? Let me tell you something. Put that coffee down. What is it? Coffee's for closers. And then the next line is, you think I'm... You get it? Anyway. Okay. Tom Keene, Lisa Abramovich, Jonathan Ferro. I'm staying out of trouble. Coming up at 8 a.m, Troy Gajewski, Skybridge co-CIO and senior portfolio manager. Troy on Bitcoin, who made some headlines when he joined us last month. Tom, you were away on a long vacation. He was with Lisa and I. And he talked about taking his portfolio with Bitcoin, 13% of it the last time we spoke to Troy Gajewski. It's going to be very interesting to see if that position has got bigger, how he's responded to the action of the last couple of weeks as well. 41.68 on futures, coming in 1/10%.
Talk about the value-added hedge funds. They've been doing better recently because they're loaded in big technology.
Yields up 4 basis points to 159.49. Euro dollar 120.91 and unchanged. Tom talking up big tech. Big tech reporting. Can we call Tesla big tech? After the bell, they report anyway. A little bit later today. And then on Wednesday, I believe it's Apple. On Thursday, it is Amazon. From New York this morning, this is Bloomberg.